Good morning, everybody. Thanks so much for being here. It's great to be here. And I'm really excited about this panel. I think that there are many more questions about stablecoins and digital currencies than answers. I think our task today is to try to figure out how many of those can we get answered in the amount of time we have. And we have a really diverse panel. So what I'd ask each panelist to do is introduce themselves, the company they're with, their role, and that should give some context to the diversity of perspective that we have across Charles, Jeff, and Kristen. So Charles, why don't you kick it off as the other banker, and then we'll go to Kristen and Jeff.
Sure, and thank you for having me here. So I'm Charles. I'm leading structuring for digital assets at Societe Generale, SocGen, very old French bank. We have a dedicated digital asset subsidiary located in France, which is called SG Forge. We started working on digital assets and blockchain several years ago, starting with security, so bonds, structured notes, I would say assets that we were familiar with. And we've started working on stablecoin by issuing our own a couple of years ago in Europe. And this has been our main focus ever since.
Terrific. Thanks. Kristen?
Hi, Kristen Keyes. I lead business development and partnerships at Paxos, and I'm responsible for our stablecoin growth strategy. Paxos is a regulated blockchain infrastructure company. We do tokenization and provide companies with solutions in the crypto space that they then provide to their end users. Prior to Paxos, I was at JP Morgan for 15 years in the investment bank. So a former banker in my old life. Recovering banker. I think that's the right way to say it. Very excited to be here today and looking forward to this discussion.
Hi, everybody. I'm Jeff Billingham. I sit in our strategy and corporate development team at Chainalysis. Chainalysis provides investigative risk and compliance solutions to a large swath of investigative agencies, regulators, a lot of folks in the cryptocurrency industry, and a lot of folks in the sort of the traditional finance sector. So I've been with the company now for 8 years. Most of my time I've been sitting in this role now for 2 years, but most of my time has always been focused in sort of figuring out and strategizing as to how the traditional financial community can integrate cryptocurrencies and all the related technologies. And prior to that, I guess I'm the only not banker. I spent a little bit of time at UBS right out of undergrad, but most of my time was actually spent at a market data firm prior to Chainalysis Market, for those of you who might know, which is now part of S&P. So great to be here.
Awesome, thanks. So, and as Nick had mentioned, I work with Bank of America. I work in our Global Payment Solutions organization, and I care for all of our innovation and strategy from the consumer account, like the college kid with the first deposit account, all the way up to our most complex global corporates and everything in the middle. So that's where I come from. And I thought maybe it would be foundational to describe, like, what is a stablecoin? What are the things about the stablecoin that kind of matter and are being discussed? And in its simplest form, really, stablecoin combines the stability of backing, right? Fiat currency, US dollar is kind of the most frequent. I think that's kind of the base case. It could be gold, it could be other things. And the coin aspect is really how can this value store token be utilized by better technology than the way that we've mapped out the way existing fiat currency works across borders, across different participants, and the data that comes with it actually having much better lineage, much better traceability and information. So a stablecoin is really a store of value. And really the base case is how can we figure out better, faster, cheaper ways to use this as an alternative. But some of the other questions that we'll touch on is actually what's the regulatory framework that would be required in order to even get started, particularly as a bank. So I'm going to go next to Jeff and ask, what are some of the other use cases for stablecoin outside of payments, right? And what are some of the things that you're seeing as usage for consumers, corporates, treasurers, markets, et cetera?
Well, yeah, I think I try to sort of categorize what the opportunities are for traditional finance on like sell side and buy side, essentially, right? So I see from our vantage point, a lot of the service innovation is happening, as you might expect, on the sell side, right? So a lot of the banks and broker dealers are sort of asking the questions themselves and to us and to everybody on this panel, right? How do I, how do I finance a stable coin? How do I custody a stable coin right alongside, all of the other sort of crypto assets that I'm interested in custodying or, providing some sort of depository functionality to my clients? A lot of people ask us, how do I bank a stablecoin like issuer and provider? A lot of folks in the banking community are just sort of really asking very basic questions about, I don't even want to touch the stablecoin necessarily, but I would like to offer like the basic banking services to this company as I would any other company. So those are some of the elemental things I see on the sell side. Whereas the buy side, I think, is sort of taking the charge of the product development, right? They're the ones who are either developing stable coins on their own, or they're sort of developing, these like real world, or I'd say these tokens that sort of mimic in a lot of ways what we call stable coins. So that's sort of the separation, I guess, the division of labor that I see between buy side and sell side. Sell side is figuring out how do I integrate this into my basic, into everything I do and just treat it like another asset class. Whereas the buy side, BlackRock, Franklin Templeton, a lot of fintechs are figuring out how do I build and construct this and offer it to the investment community.
Great. Kristen, you want to add anything or other observations for where you're seeing stablecoin going and Paxos's point of view?
Yeah, I think what's very exciting is we're especially now seeing this great transition where not only are those digitally native companies interested in stablecoin, but you're really seeing this transition into more traditional finance, fintechs, banks, and really exploring a lot of different types of use cases. And it ranges from just how do I even bank a stablecoin issuer and just support the system to I want to move a unit of currency cross-border and I want to do it more quickly, or I want instantaneous settlement of a tokenized bond and fiat at the same time. And we're really, really digging into a variety of companies with what those use cases look like. There are a lot of them. Stablecoin doesn't solve every problem out there, as perhaps some, might like to say it can, but it can solve a lot of problems that we in the banking community look at and could just gain so much efficiency from. And so those conversations continue to expand and accelerate.
Great. Charles, you said that you guys are on the journey already, right? And maybe just complementing from a bank perspective, where have you started? What are some of those use cases that you're evaluating or delivering against or piloting?
So as Kristen said, before launching our stablecoin, we started with tokenized bonds and tokenized securities. And so when we were trading with clients, we always faced the same issue, meaning they had to wire the money first, and then we would transfer the tokenized bonds. So we were kind of halfway there in terms of promise of blockchain and everything. So we said, well, let's do everything on chain. We couldn't find a proper stablecoin at the time. This was several years ago before any regulation. So we thought, we know how to handle an asset-backed structure. We know how to issue tokens. So we are able to create our own stablecoin. And so that's the first use case we worked on with a few clients. And it's actually public. We did one transaction with a large insurer in France last year on a bond, and he bought our bond using our stablecoin. So this was kind of in a few minutes, we settled everything, issued the bond, settled, and the client was happy. So that's the first use case for us. The second use case is really how can we use stablecoins in any kind of, I would say, usual financial transaction that we would see as a bank. So it can be, with our clients, like using stablecoin as collateral. It can be transacting on-chain against other cryptocurrencies, etc. Another use case is, I would say, offering our stablecoin as a valuable alternative to all the other stablecoins that are out there. So making it available on crypto exchanges. That's one of the cool things about stablecoins is that they are fully transferable. So we listed our stablecoin on large crypto exchanges in Europe. And so you can buy our stablecoin the same way you can buy Bitcoin or Circle stablecoin. And the last piece is going back maybe to what you said earlier, for our corporate clients that are looking for efficient ways of managing cash. And if anything, one of our corporate clients that now uses our stablecoin actually didn't buy the stablecoin from us directly, but he went on an exchange, bought the stablecoin on the exchange, and now he uses it for his corporate treasury. So yeah, that.
I can't imagine how we would get that through procurement, how the invoicing and everything else would work for that. Well, great. Well, why don't we pivot a little? Let's talk a little bit about some of the regulatory environments. And I'll touch a little bit on the US, and then Charles, you can discuss the EU, and then we can go from there. But, you know, I'm not sure how many people here follow it, but there's a Genius Act, and then there's the Stable Act. And these are making progress here in our legislation. There were some updates as recently as last week. And really, these acts are caring for two different things. One, banks who are issuing stable coins, and then second, what I would call generically the wallet providers, so the people who are going to store stable coin and basically facilitate transactions. And just a couple things that I think are framing key questions to be answered. One is around, how can you go out and license and supervise a company that issues stable coins, right? As a financial institution, those are really important things, because as we design that or we partner with others, we would have to have those controls established. The second is, what is the standard for reserves? Is it dollar for dollar? If it's dollar for dollar, where do I have it? Does it have to be at the Fed? Does it have to be in my account? Can I bank others and have sub-accounts on their behalf? So lots of details around how that liquidity is managed. Can you lend against it? Does it represent collateral? Basel III, so lots of other things coming there. And then, I think one constant within the market for many different payment types are, what are our responsibilities for KYC, for anti-money laundering, OFAC, all these other things that happen with fiat currency. When bad actors are in the system, we have a responsibility, and there are liabilities that we all share. But what do we need to do in the case of a bad actor using a stable coin instead of fiat? So those are some of the key questions. And I think there's all sorts of conflicts, typical United States. There's one perspective about how far the federal government goes. There's another perspective that it's okay, the states will regulate these things. So I'm sure it's going to be very exciting. So Charles, why don't you touch on where you see the trends and the regulations going with the EU? And then I'd love to hear from Kristen first, and then Jeff on what your observations are.
Yep. So in the EU, we have a regulation on stablecoins since last July. It's called MiCA. It basically assimilates stablecoins to electronic money, which has been in existence for several years now. And so everything that's applicable to electronic money in Europe is now applicable to stablecoin issuers in Europe. So if you want to be able to sell your stablecoins in Europe to the public, list your stablecoins on exchanges, etc., you must have an electronic money issuer license and I would say follow the electronic money rules. So this comes with capital requirements, obviously, rules on the reserves and everything that you mentioned. So the good thing is that we are, I would say, reusing an existing legal framework. The bad news is that this comes with a lot of requirements that are useful for prepaid cards, but that are not really applicable to stablecoins, like tracking, payments. How do your clients use your stablecoins when they do cross-border transactions and things like this, which is kind of easy when you have prepaid cards. You can follow the transactions over here, but with stablecoins, even though you can see everything on chain, it's kind of hard to know where the stablecoin is going from country to country and why it's useful. So the good news is that, we have an appropriate framework, and now the rules are clear. Some issuers have not the license, so we do have one. Circle has one, others as well. Now we are trying to get the rules to be changed and tweaked a little bit just to accommodate for stablecoin specificities.
Great. Kristen, what are you seeing from a regulatory perspective? I know Paxos is global also, right? So you know what's going on in Singapore and lots of other places.
Yeah, that's right. So I think what's interesting about the US is that we're a global leader in so many ways, but we've candidly just been a bit slow for bringing regulation forward that's really clear. And what that has resulted in I think some business moving offshore and seeking clarity in other jurisdictions. It's also kind of evolved into a lot of different approaches to stablecoins, everything from completely unregulated to those issuers who operate on MTLs, to those like Paxos who operate under a prudential regulator. We're a trust company, so we're governed by NYDFS out of New York and other prudential regulators globally. What I think we're seeing in the legislation that is heartening are just some certain standards that just should be in place in the US and also globally. And I think regulators are generally working towards those. Like first, there's the concept of like bankruptcy protection, the fact that client funds should always be segregated, that they should be bankruptcy remote. It's just the gold standard of how we should handle client money. And I'm heartened to see that, coming through in some pieces of regulation. To touch on an early point, I think reserve standards are incredibly important. At its essence, a stablecoin fiat is just a dollar on a blockchain, but it's so essential that you can get that dollar back at any point in time. Otherwise, all these wonderful use cases that we're contemplating simply fall apart. And to have a regulator say what is appropriate to have in those reserves and what is not, I think is very important. So we're concentrated on principal protection and liquidity. And so I do think that we will see more regulation on that coming forward, but it's simply something in my mind that really needs to be in place. I also think it's very important for us to continue to, push for laws around like transparency, attestation. So companies always show you what's in the reserves. You should always know where your money is. With today's technology, there's no reason why you shouldn't be able to see that. Along with audits of the companies that are doing these, like you would regulate the highest, most regulated financial services. I know Rich touched on AML, KYC, all of these things that just should be, frankly, no different for a stablecoin issuer, given its operations. That's other companies. And I think we're getting there. And I think that the view of the industry is we don't care so much what the rules are, but let's figure out what those rules are and just make them very clear and of the highest standard and have everyone know what success looks like for the space.
Listen, I think what I like most about the regulation and how it's developing in the US is I think it's getting to and asking the question of counterparty risk that probably most people in the audience have when they think about stable coins. At least the questions were asked, right? When they sort of identify a use case that they want to go after, there is this sort of all these different flavors of like highly liquid tokens that are coming from different counterparties, right? So they come to us and say, how do I know the difference between something like from Tether versus something from Paxos versus something from, I'm also looking at these money market funds that are tokenized from BlackRock that are tokens that are backed by highly liquid treasuries, right? So there's sort of all these different flavors of what is essentially a token that is backed by some sort of governance structure of, highly liquid US securities. So I think what this gets at is sort of, specifying what are the things you should be, asking of the stablecoin issuer, and like what should you expect that stablecoin issuer to do, and how should it behave if you're going to actually trust the fact that you can use a token from them and guarantee that you actually have, a dollar behind that somehow. The other thing, and this is sort of specific to what Chainalysis, the questions we at Chainalysis get is, aside from all the new regulation that happens, if and when there is some sort of integration of crypto or stablecoins, be it to, contribute to the financing of that stablecoin and make sure that you actually can get your dollar for your token, or to use it internally, be it for, everything we're talking about here, like settlements is probably the biggest thing in capital markets that I hear of, or, ease of treasury settlements and cash management and things like that. The question then actually turns to BSA, right? So they're saying, how do I make sure I'm not dealing with, any sort of coin that is associated with illicit activity or illicit actors or things of that nature. So that's, I think, where the KYC, it's less about sort of counterparty risk and becomes more of like a KYC compliance conversation of, hey, Chainalysis, can you tell me, when we're receiving these stable coins, can you confirm, there's no indirect exposure to, or this hasn't been used by an illicit actor previously? We get a lot of questions actually that sort of seek to provide some insights and clarity into, hey, I want to look at the entire sort of ecosystem of a stablecoin and see, what percentage of the flows of the stablecoin are associated with illicit activity. How many are, how many are sort of distributed across exchanges in the U.S.? Can I get a sense of how liquid this actually is? Not the dollar part of it, but how accessible is this stablecoin across the world? So those sort of questions about, I would say, almost like know your coin and know your counterparty who's actually using it are the more sort of familiar conversations that we get that are all rooted in BSA compliance.
Nice twist on KYC. I see what you did.
Yes.
So Jeff, as you framed that and the kinds of questions that Chainalysis helps answer, I also think it'd be interesting to hear, how do you go to market? Like, as you're helping serve banks and non-bank clients, like what's your entry point? Like, who are you usually working with? What are the types of solutions? And then Kristen, I'd love to hear about Paxos too.
Yeah, I'd actually love to hear how you approach this too, because a lot of times we don't know what we don't know. Please help. Like a lot of people, I think, are still trying to investigate not just how they integrate these kinds of things, but like how do you generate revenue and how do you actually provide a service to your clients, right? A lot of folks are still sort of looking for that, the answer to that. And I think a lot of the reason we're talking about stablecoins now is because interest rates are not at zero, right? Like I remind everybody that Tether has been around for close to 10 years or over 10 years, I think, at this point. And the interest has only come up recently, I think, through news and media, because it's a very small, very efficient team that's offering, they have a ton of liquidity, but now the interest rates are not at zero. Like they're making hand over fist, right? So the question has always been, okay, we have these sort of flashes in my 10 years of being in crypto of, oh my gosh, Bitcoin's at $20,000, everyone needs to get into it, or wow, stable coins are something that I think I need to integrate into my business. People are still looking for, like, how does it actually solve problems for my clients? So, I think the closest when, we have these sort of investigative or exploratory conversations with folks, a lot of people will land on, I think the basics, like the way to sort of build your foundation, so to speak, is on the defensive side. So there is a huge, how do I train my risk and compliance teams to understand the threats, collaborate with law enforcement, collaborate with our threat intelligence vendors. Like, you really have to build a center of excellence for yourself to understand how to begin to play, right? So that's sort of step one. Step two, I think, is actually integrating the functionality into your system. And that does come down to like deposit taking and custody, right? So these are probably the unglamorous, unsexy things about crypto, but that's where I usually see folks coming in. And that's, of course, integrating and making sure that you have the ability to, understand your risks when you're sending and receiving any type of asset, token, cryptocurrency, stablecoin, what have you. And certainly being able to sort of communicate that to your regulators efficiently. So that's usually where it starts for us.
Great. Okay, Kristen.
I would echo some of what Jeff said, is that from the partnerships perspective, we always start with, like, what is the problem you're trying to solve? It's always a good place to start. It's very easy to get excited about all these things we're talking about, but as I mentioned before, stablecoin, I do believe, can solve a lot of problems, but not every problem that people come with. And so what we try to do at Paxos is, again, start with, what is our customer trying to solve? And as an infrastructure provider, what we do is we try to package a regulated solution so that that company can take that solution and give it to their end users. And in that way, you're relying on Paxos often for the regulatory stack, the technology, the operations, and it allows companies, once we figure out like what the solve is, to rely on someone who's been in the business for 12 years in order to go forth and do it and take out some of the guesswork and pain points that I think plague and slow down certain companies, and allows them to get to market in a way that's a bit quicker, and also embrace perhaps like a crawl, walk, run mentality, where we start with using more infrastructure and perhaps over time we build our own, or we figure out what parts of this business we want to invest in, but at least we can start relying on a trusted provider to do so in the beginning. So for us, that looks like on the infrastructure side, we allow companies to use a white label solution to buy, sell, and hold crypto and stablecoin. We do that for PayPal. If you go into PayPal app, that's Paxos powering that. And on the tokenization side, we do that for stablecoins. So just two key examples in the market would be a company might come to Paxos and say, we want to use a stablecoin, we want it to be branded, we want it to be our own. We do that for PayPal with the PayPal coin. We're the company behind the scenes. We also have other companies that come and just want to use an unbranded stablecoin, get to market very quickly and kind of rely on like a partner network that we have with Global Dollar USDG. Again, relying really heavily on Paxos and the team of partners that is providing that infrastructure. But the solution can take, I guess, multiple different paths. But those are just the ways that we're trying to package a solution and allow people to get to market and learn in a way that's safe and additive to their business.
That's great. So it's really turnkey, effectively, other than the
That's what
branding.
we aim to do.
Awesome. Just one point, I guess, the Bank of America perspective. We too are seeking which problems to solve first. How do you get started? And we're kind of in a preparation phase where we need to understand the technology. We have to start to get the talent working together, right? It's not a part-time job anymore. How are we going to implement the appropriate controls? And then last but not least, operationally, what do you need to be prepared, right? You probably don't need a whole dedicated call center, but people are going to have questions, whether they read it in the marketing or whether the first treasurer or someone else uses it. Charles, anything you want to add about your go-to-market, some of your learnings and where you see things as you already have a coin?
Yeah, I mean, it's been a journey issuing a stablecoin on a public chain. So maybe one thing, so that we are all on the same page, but stablecoins are freely transferable, so they can end up in any kind of wallets in the world. Well, you can block some of them, but basically that's it. As opposed to tokenized deposits that you may also have heard of, which are restricted to the clients of an entity. So when a bank issues a tokenized deposit, it's basically for their own clients to play with within the bank, as opposed to a stablecoin that the client can come to us and buy our stablecoin, but then use it on the other side of the planet. So obviously it raises questions, as Jeff said. Can we track where our stablecoin is going? How do we make sure as a bank that what we are creating is not used for illicit purposes? Do we have any kind of power over the coins if this becomes an issue at some point? Can we, block, freeze, and seize, etc.? And this is not just like from a product perspective. You have to discuss with everyone internally. So legal, compliance, risk, operations, IT, cybersecurity risk. And not everyone is up to speed on this subject. So it's been quite a journey to discuss with everyone, get everyone comfortable. But again, I think in Europe, the good thing was that we had a regulation last year. So this definitely helped to, I would say, frame and the discussions with our regulators helped as well, just to make it very clear that we were allowed to do what we wanted to do, and that with proper guardrails, this was fine. Maybe the last thing that's I think interesting is, as a client or as a user, will we see tons of stablecoins in the market in the future? Will every bank come with its own stablecoin, and will this fragment the market? That's kind of an open question for me. I don't really have an idea. I think an interesting thing I heard was at the last conference was when today if you issue an invoice and you get paid by check, do you read which bank has issued the check, or you just don't care? So maybe that will be it. Maybe everyone will have a stablecoin and everyone will accept them. We'll see, but that's, I think, what the kind of evolution we will see in the next few years.
Interesting. So to follow on that, what are so that's one kind of challenge and opportunity, depending upon how you play it or how we may all play it. What other kinds of challenges or opportunities you see from a technology, regulation, operation, like, I think client education might be one, like how or when would you use this versus fiat? What have you experienced? And then I'll just come down the row.
Yeah, so definitely client education, having stablecoins included in the, I would say, basic accounting systems would help a lot so that everything is streamlined for our clients. The other potential issue we face is seeing different regulatory frameworks throughout the world. From now, we issue in Europe. We put in our legal documentation that our product is restricted to non-US person because we just don't know what the future will hold in the US and if there will be any kind of extraterritorial reach. But we can't really block our stablecoin from entering the US. So there's definitely some kind of regulatory challenges ahead. And we are following this very closely. But I think that will be a key area for us because we have branches everywhere around the world. So making sure that we are perfectly comfortable from a legal and regulatory standpoint is key. The other point is that usually regulatory framework will ask the stablecoin issuers to hold their reserves locally. So in the US, that's something you can see in the draft bills. We have the same in Europe. So basically, the stablecoin issuers must hold and custody the dollars that back the stablecoin within the US. And so for us, for now, it's in Europe, and you can't really know what percentage of your stablecoin is flowing to the US and how you need to rebalance your reserves between the countries. So that's another thing that will be interesting. So several subjects.
Fascinating. Jeff, how about you?
Yeah, I think the challenges are sort of one of prioritization and two of education. So I think the prioritization side is, I mean, again, it comes down to like, how do you want to use a stable coin, right? And I think the two biggest sort of, and these are not mutually exclusive, but do you want to use this, in order to allow sort of like your consumer base to be able to use the deposits at your institution in a more fluid, digitally native way? And then you have the sort of discussion of, do you want to be using this from a sort of a corporate lens? If you are on the buy side, do you want to, maybe sort of like relieve yourself or like not be as dependent upon the entire payments and settlement infrastructure that is a huge part of buy-side business, by the way, or sell-side business? Is there a way to do that in a more efficient, more cost-effective way with stable coins, right? So there's this sort of like, how do I prioritize what I'm doing? And then, I think as Charles said, the education and coordination that it takes to integrate these kinds of things at a financial institution. Chainalysis, I mean, we're born out of doing work with investigative agencies and then cryptocurrency businesses. Like the reason that cryptocurrency businesses exist is to do everything that we're sort of exploring in this room, right? So the integration and go to market with crypto businesses is like that. We worked very closely with the Bank of New York. That was, again, I've sort of, prior to my role, I was in sales, and I remember sort of bringing Bank of New York through the journey of integrating crypto custody. And that was, I mean, coordination from the product team to compliance, to KYC, to onboarding, to legal, to sanctions, what was enormous, right? So you're repeating yourself over and over again, for several months. With the best and brightest people too. This is just a very new thing for them. So I think that coordination between a broad swath of folks, even, I mean, everything from, like I said, the business, then the executives saying, yes, do this, all the way down to tech integration and legal, needs some sort of coordination and education as to what it is that they're actually integrating.
Great. Kristen, how about you in terms of the biggest challenges and opportunities across all of this stuff to do it?
Well, there's a lot, but building off a point Charles made, I think what's very important for stablecoin, the whole goal is to be able to get stablecoins to operate globally and not to have to pick a stablecoin based on just whatever jurisdiction you're in. But what is necessary then is, what we refer to as like multi-jurisdictional compliance or a path to that. So a way of officially recognizing the stablecoin is MiCA compliant in the US, Singapore, and having a way to say that it satisfies all of these requirements, but there needs to be then some kind of formal way to show that. And I think that is something that we're working towards, but still in my mind is a little bit fuzzy, especially for issuers that are really aiming to put forth a global solution. The other thing I'll pile in on education. I think this is a space that's incredibly innovative, exciting, and fast-paced, but there's a lot of noise. And sometimes that noise detracts from the hardworking builders, the good actors, the people that are trying to solve real problems. And so I think, part of the challenge is helping everyone separate the noise from the signal and then what is really positive and, what can we really do with this technology that can improve our businesses and the way money moves.
Awesome. All right, we're going to do a rapid fire with the final question regarding bringing together all of these different questions that we're trying to answer and all these different forces. We're all sellers and buyers, both, right, in this space, which I think is also exciting. So what's the biggest open question that you need to answer to go to market, right? And I'll answer first so you guys can think. Our challenge is there's still a lot to do with fiat currency to speed the way that data and settlements can work for fiat currency. So in my day-to-day, I feel like there's a race between how can we get the regulatory frameworks? We have plenty of technology, cross jurisdiction, all those exact same types of things to make fiat move faster, like perhaps like between two different domestic real-time payment networks, whilst getting our hands very dirty with stablecoin and crypto and looking and evaluating what those options are going to be. So that's a big question for us. Charles?
I think on my side, it would be how we get our clients up to speed on these products that we are offering them. But we don't have our hands around everything our clients' systems. So how we make sure that our clients has a custody solution that will allow him to receive the stablecoin and use it. How does it integrate into its accounting, tax system, reporting systems, risk systems? And we are kind of limited by these integrations right now. So that's a big ask on our side. Okay.
Jeff, then Kristen, you get the last word.
I think the question that we ask ourselves is, do we have conviction that the sell side in particular will move? Can we bring them to water faster, easier, quicker, right? I mean, the answer is absolutely yes, but that's something we always come back to when we I think it improves our process to say, if we do have this conviction that we can help educate, we can help paint the picture of what you can be doing with stablecoins or any crypto assets, and here's what your first move should be. Frankly, it's always going to be risk management leading that operation. Yes, you should have business and execs who see the future, but risk management's going to lead on that conversation. So for us, we always ask ourselves, do we have conviction that we can help move the needle? And what's the best way for us to do that? So I think that's the question we're always asking ourselves internally.
Kristen?
I think my big question for me has to do with market structure. With the rise of stablecoins, we have a lot of companies coming to an issuer like Paxos saying we want to launch our own, or we want a branded stablecoin. As Charles mentioned earlier, the question is, well, how many stablecoins does the world need? Maybe it's hundreds, but perhaps that ends up fragmenting the market. It's actually quite hard to build a new financial asset. So I think the open question is, how many is there room for? The types of companies that are really well suited to do this versus those that you do an unbranded option, and kind of thinking about how all that comes together in a market structure and perhaps interoperability that really works for everyone now and in the future.
Awesome. Well, thank you all very much. This was really great. I'm sure there'll be more questions this time next year too. Thank you all.